Hello, this is Jack Crooks, Black Swan Capital. It's 6:05 p.m. Eastern Time, Tuesday, February 22nd. Looking at the Australian dollar daily chart, Aussie US dollar pair. We happen to think that the Aussie, being the key risk appetite currency, meaning it moves the most on risk appetite, growth in the air, those types of things along the lines of what the same thing stocks move on. Could be in for a little deeper correction here given what's going on in the background. From what we read, what we see, it looks as though this thing in Libya could be a lot longer drawn out affair. It looks like this could break down into an ugly civil war, and if it doesn't, there's a potential that there could be a major hit to the oil supplies in Libya, with the idea that if Gaddafi knows that he's going down, he's going to make sure that there's not the ability to produce the amount of oil they're producing now, i.e., and not to hand over the keys to the kingdom to those taken over. So either way, we think this is a nasty affair that's going to continue in at best case drag on in a civil war type of situation, which we think will impact the market and finally play on the market given where we are being due for a correction. And we think the Aussie will play into that. Let's take a look quickly before we go through the wave analysis of this. Of the Australian dollar versus the S&P. This black line, these bars are the Australian dollar. The red line is the S&P 500. You can see the S&P turned over today. You can see it's a pretty tight correlation, not as tight as it was in the past, but it does suggest that and point out that the Australian dollar is clearly the risk aversion currency and moves on the same type of movement that the S&P 500 moves on, which is global growth and opportunity out there. If we take a look at just the S&P itself and do a little wave chart analysis since the credit crunch, this was the credit crunch high. Credit crunch hit, obviously, and the S&P got destroyed. We had QE1 come in here in March of 2009, and it did the trick and just drove the stock market much higher in here. And if we do a wave count on this, we had a 1, 2, 3, 4, 5, a pretty good fit on a wave count, running into some resistance in here and a couple different projection levels in this range. So it's very much due for a correction, and we think if it does, the Aussie will tend to follow, given, as we said, the risk background, and also what's going on in New Zealand hasn't helped with the earthquake in that portion of the country. So you can also see this is the MACD, moving average convergence divergence, and it's starting to fall actually as we made this big move into the high. Momentum has actually declined and shows a bit of a divergence, new high, and we didn't make a new high on the MACD. So that's another characteristic of a wave 5 move, or often a characteristic of a wave 5 move. So if we go back to our chart of the Aussie daily chart, and as you know, we've looked at this before and said this move here could be either a 3 and this be a 4 and a 5, a big rally up, or this could be a 5. It could count as a 5 as the top is in here in the Australian dollar. We don't know, obviously, but we're starting again to see this turning over, lower highs here, lower high here, and we're expecting maybe a test to come in place here at 99.43. So we're looking to sell just below this level, 99.43. Our target is this 4, number 4 right here, which is fourth wave, but to a lesser degree. So we think there's a possibility of a pullback, a deeper pullback into this range, possibly even more if the stock market continues down on this news that is finally starting to feed in and finally starting to hurt stocks today. We've seen this bull market, no matter what the news, is continue to climb. And today we finally may have seen a change to this pattern. And if that's the case, we think it's a fairly good risk-reward setup in here to short the Australian dollar. So that's it on the trade for now. If you have any questions on this setup, feel free to let us know. Thanks. Bye.